Good day, ladies and gentlemen, and welcome to Numbers That Grow on TV Royal 21, where we strive to be a force for good. On this sit down, we have the Chief Executive Officer of the Colombo Stock Exchange, the man behind the helm, if you will, Mr. Rajiva Bandaranayake. Mr. Bandaranayake, it's an honor to have you with us.
Hello, pleasure to be here.
So, sir, let's jump right into it, shall we? I would like to know what the stock market is from you.
Okay, so let me sort of put it in very simple terms as to what happens in a stock market, or if you go a little broader, the capital market as we consider it. So it's all about channeling savings to investment. So what the stock market does is, on one hand, it provides a platform for companies, both in the private sector and the government sector, to reach out to the public, to investors, and raise capital for their businesses so that they can expand their businesses, grow their businesses, set up new factories, etc. And on the other hand, the stock market also provides an opportunity for those investors to invest their hard-earned savings and receive a return for their investment or their savings. So it's all about collecting the savings of the people and channeling it to very productive areas of investment. So it contributes to the growth of the GDP of the country. It creates employment by expanding businesses, setting up new ventures, etc. So there is a economic role in the stock market, as well as wealth creation for shareholders, and also enabling the corporate sector to raise much needed capital. So in a nutshell, that's what happens in a stock market. Of course, it's a far more complex operation than it itself. So there is a whole heap of operations around this activity which I described, and also a large amount of stakeholders. For example, at the apex, we have a Securities and Exchange Commission, who is like the watchdog or the policeman, the regulator of the capital market. Then we have an institution called the Stock Exchange, the Colombo Stock Exchange, in our case, where the organization that is responsible for conducting the operations of the stock market. And then we have various stakeholders, like, for example, listed companies that raise money. You have stockbrokers, that's a market intermediary which acts as an intermediary between investors. And then we have the investors. We have other market intermediaries who provide various connected services to enable the stock market, like information providers, margin providers, investment managers, investment banks, credit rating agencies, an entire ecosystem around which makes the stock market work. So there is a large group of stakeholders collectively which make up what we call a stock market, and in expanded sense a capital market, because capital market would include fixed income securities as well. So that's what the stock market does.
Okay, so the stock market is a productive use of capital, is it?
Yes, correct.
Okay. So let's shift focus towards specifically the Colombo Stock Exchange. What role does the Colombo Stock Exchange play in the stock market, and as well as what's your role in the stock market and the Colombo Stock Exchange?
Okay, so I'll put both together. If I talk in terms of my role, so I am responsible for the day-to-day operations of the Colombo Stock Exchange. Now in this, we have on one hand a development role, and on the other hand we have what I would term it as an operational role. So our primary responsibility, and that becomes my primary responsibility, is to operate a platform so that what I described earlier can be enabled. Companies to raise capital, investors to invest their money, and create a secondary market for trading of shares, buying and selling shares. So we need to create a IT system around it to enable this platform. Then there is a regulatory aspect to it. we have sets of rules that govern the conduct of parties that are connected to the market, which I described. For example, we have a central depository where investors have to open accounts similar to bank accounts. There's a set of rules that govern that. Then there's a set of rules that govern stockbrokers. There's a set of rules that govern the listed companies. So it's also our responsibility to ensure a fair and transparent market. To do that, there is a regulatory role. So we have an operational role in terms of providing the systems. Then we have a regulatory role, which there are sets of rules which we enforce. And then we also have, like any other organization, all of the support services like human resources, finance, legal, internal audit, etc., that any organization would have to ensure that the organization is properly run. So that becomes my responsibility as well. Apart from that, we also have a development role. That is, where do you take the stock market to? How do you develop the stock market? That you do by, for example, broad basing the stock market, by getting new investors into the market. Then you get more companies in. Again, you grow the size and the liquidity of the shares by encouraging more companies to come and list, and there are various measures that we do to do that. And then we also have a responsibility to introduce new products. It's not only shares, it's not only corporate debentures, but a range of other products that we are working on to introduce to give a wider choice for investors in terms of investing in different asset classes. So in a nutshell, that's what the stock exchange does, and that becomes my responsibility to ensure that there is a well-functioning market, a transparent and a fair and orderly market, so that all these activities can take place.
So the Colombo Stock Exchange is the outlet that Sri Lankan people can channel the stock market through. Is that right?
Yes, in a sense, yes. And so we have the stock market, like a market, like any other market. So the Colombo Stock Exchange is the organization that operates the market. It's called the market operator. So this is the organization that operates the market, runs those IT systems and the platforms to enable this activity to happen.
So you are the fuel, essentially.
Well, in a sense, yes. In a sense, we facilitate. We are a facilitator.
Yeah,
we are a facilitator of the stock market. Yes.
Okay. This is, I believe, one of the most asked questions from people who are trying to get into stock exchange. Is investing better than deposits and savings?
Well, let me put it this way. It depends on your investment objectives. It depends on the person. It depends on the risk profile of the person. Now, if you look at fixed income security versus capital market, there's a fundamental difference. When you invest in fixed income securities, you are talking about a regular return for the money that you invest, a percentage return, either monthly or quarterly or half yearly or annually. Whereas if you talk in terms of capital market, it's about growing your capital. So when you invest in fixed income, it will all depend on the investor or the person. What is your investment objective? If your risk profile is such that you want a regular source of income monthly and you're depending on that, then perhaps a fixed income like a fixed deposit is more suitable for you because it will give you a regular fixed income. If you are a person who is looking to grow your money, aggressively grow your money, but you're willing to take some risk in doing that, then you need to get into stock markets, because that's about investing is about growing your money. You are investing in the potential of a company, the future potential of the company. So there is the ability for you to grow your money. So when you're investing your money in a stock market, you're talking about wealth creation. You're creating wealth for yourself, you're creating wealth for the shareholders of the company. So that's the basic difference in investing in a fixed income security, for example, versus the stock market. So I think ultimately it boils down to the individual. What is your investment objective? If you take a young person and take the life cycle of a person, for example, depending at what stage you are, you will opt to invest either in a pension fund or a fixed income security or the capital market to grow your money. So it all depends on individual's investment objective.
So it has its benefits to the right people.
Yes, of course it does.
Now you did mention risk a couple of times. So there's this term that I have heard, which is it's called calculating risk. Now, what can you say about calculated risk and how does it affect a investor?
Yeah, so let me first talk a little bit about risk. Risk is something that all of us live with in our day-to-day lives. We cannot totally eliminate it, but we can minimize and manage it. For example, when we walk on the road, we always run the risk of getting knocked down. But if you are careful, if you walk on the pavement and be careful, you can minimize the risk of you getting knocked down. So you have this element of risk day to day in our lives. Now similarly, if you look at risk in terms of what you asked, an individual can take a considered decision that will entail either personal and financial risk to that individual as a result of that considered decision, and expose that person to financial and personal risk. But to counterbalance it, there will be a certain benefit accruing to that person as a result of that person taking that risk. So that's what you call conditional risk. So even if I put it in the context of a stock market, we have this risk return principle. So the higher the risk, higher the reward, lower the risk, lower the reward. So it's about the risk return principle. So if you are, for example, willing to take a lesser risk and you want more security, you will, for example, invest your money in a government treasury bill because your capital is almost guaranteed because you're investing with the government. But your return that for the investment that you make may be fairly low. So low risk but low return. But if you want a higher return, you may opt to invest in the stock market. Now there you carry a higher element of risk, but then the benefit would be you will potentially get a higher return as well. So higher the risk, higher the return. So we have this risk reward principle as well embodied in when you talk about stock market investing.
So calculated risk directly correlates with the profit amounts, right?
Somewhat, the returns that you get.
Okay. Now there's this term IPO. It's an acronym. Can you explain a little bit about IPO and how it might affect the investors?
Well, when you talk about the stock market, you have actually two markets that operate. You have the primary market, that is, and the secondary market. The primary market means when a company decides to list and goes out to the public for the first time and issues shares for the first time to the public, it's called an initial public offer or a IPO. And that can be done in two ways. One is where they issue new shares, they create new shares and what we call a prospectus issue, or the existing shareholders of the company can sell what they own, and that is called an offer for sale. So both those are termed as IPOs or initial public offerings. So when the company goes for the very first time to the public and then they issue shares or sell existing shares and raise capital for the company, that process is done through what we call IPO, and that's termed as a primary market. And if I were to elaborate on the secondary market,
please.
Those shares that you buy from an IPO, when you want to sell it, you go to the secondary market, and that's what we see operating in the stock exchange. You know, those electronic quotes and the boards and all what goes on there is the secondary market in operation, where investors exchange or keep buying and selling shares that are already issued through an IPO. So that's the secondary market that is in operation.
Okay, so just to kind of put all of this into a small sentence, it would be the company issues shares into the primary market, and then investors would buy from the primary market, and then when they're reselling, they would sell in the secondary market.
Right? Exactly, got it spot on. Yeah.
So now let's get into the side of completely new investors, or more specifically the novel investors that are just stepping into the world of investments and stocks and all that. So now what are generally the things that a completely new investor should keep in mind? Alongside that, could you elaborate a bit about brokers and what they are and what they do?
Okay, so I'll answer that probably in the context of somebody wanting to get into stock markets. So the very first thing that you need to do when you think of investing in the stock market is, I think you have to invest your time before you invest your money and learn about the stock market. And there are a number of ways you can do that, right? And we'll get into it in a bit of detail. So you first learn what the stock market is. To do that, there are, as I said, number of ways where you can use a lot of tools, educational tools, to learn about how one could invest and how do you, for example, analyze investments, the suitability of getting into stocks versus fixed income. So all of that needs to be part of your learning process before getting into the market. So I think the first item on the agenda should be, you need to be well informed. So you need to learn about the market. Secondly, once you do learn about it and you make a decision that you are ready to invest in the market, you need to open what you call a CDS, or a central depository account. It's similar to a bank account, and that is open with a separate company that's a fully owned subsidiary of the Colombo Stock Exchange, which is like a bank for shares. So everybody who transacts, wants to buy and sell shares, must necessarily open what we call a CDS account in the central depository, and that you do through any of the licensed stockbrokers. And I'll come to your question about stockbrokers. Now, the role of a stockbroker is to act as an intermediary to assist investors to buy and sell shares. So when you want to participate in the market, when you want to invest in the market, you cannot directly come and participate. You need to go through a stockbroker. It's like going to a court of law. You can't directly go and represent yourself. You need to go through a lawyer to do that. So similarly in the stock market as well, you cannot directly open an account and start buying and selling shares directly. You need to go through a stockbroker. The reason is that the stockbroker plays a very important intermediary roles and does several things for you. One is, of course, give you the proper advice, give you information, educational material to do that. Secondly, they coordinate your payments and settlements on behalf of you. And thirdly, they provide the link between buyers and sellers. So they intermediate between buyers and sellers. They put buyers and sellers together. So they perform a very important role as a market intermediary. So then once you do select one of or many stockbrokers that you want to transact to, there are 26 licensed institutions that provide stockbroker services. You need to select your broker and then decide to open an account. You open an account. Once you open an account, then you can buy shares by making the relevant payment to the broker. So it's a very simple process, and I think also a good time to tell you that we have completely digitized the process so that anybody from any part of Sri Lanka, now actually from any part of the world, can use a mobile phone and onboard yourself completely digitally by signing all the agreements, by uploading your necessary identification, and then choosing a broker and getting access to trade online, get a trading platform also onto your mobile phone and conduct all your trading activity, and then make settlements also electronically through the internet banking system. So it's an end-to-end completely digitized process So you don't have to physically visit either a bank office or a stockbroker office. Seated from your home or wherever you are, using your mobile phone, you can completely take part in all of the stock market activities. So, and very easy steps to follow.
So, on the topic of digitizing, what did it used to be like? Because one may be curious. Now we can do everything at home, but how was it before that?
We were anyway in a state of a fair bit of automation. We had automated trading, we had electronic serious accounts, which means you don't have any paper on it. But essentially the entire ecosystem was manual. For example, stockbrokers had to come to the office, we came to our offices, investors visited stockbroker offices, they had to go physically and visit a stockbroking office to sign the agreements and open accounts. Now the pandemic, we had planned digitization, we were planning the rollout, but the pandemic forced us to very fast adopt a completely new way of transacting business in the stock market, and that's the remote way of working. So very quickly we set in motion all of the processes plus the technology necessary to enable this remote working, and I think in a relatively short span of time we are one of the very few industries that went completely digital, and we operated the stock market completely remotely. From our own homes, we opened the market, operated it and closed it, from everybody working from home. Stockbrokers work from their homes and participate. So entire ecosystem converted to a complete digital system of working, and I think as an industry we have fared well. We have done exponential volumes in the rush, much more than what we did earlier. So not only did we do remote working, not only did we digitize, but that has seen almost a 5-fold increase in volumes. Now in 2019, for example, before the pandemic, we were doing 1 billion of business a day. Today we are doing over 4.5 billion of business a day. So it has even increased volumes. And I think that digitization has resulted in a lot of young people coming into the market. Another new trend that we have seen. Of the new accounts that have been opened in the last 2 years, we have seen that 80% of the accounts have been opened by those below 40 years of age. And that's a definite shift, because traditionally, stock markets had 50 plus age investors in the market. But now we see a definite shift, perhaps as a result of the digitization, because younger people are more savvy in using technology. So we have seen even the 20 to 30-year-olds getting into the stock market.
So you said that traditionally it used to be more older people that invested in the stock market. So when considering younger investors, are there any mistakes that young investors do when they first start investing?
I wouldn't term it as a mistake, but I think it's a process of experience. Your experience helps, and you need to experience the market. And that's why when we talk about stock market investing, we say don't put your eggs into one basket. Don't put all the money that you have in the stock market. If you have money kept away for a rainy day, keep it for a rainy day. But if you have that extra money, then you put it into the stock market. And secondly, you must always start small. Don't put all your money. Experiment with it. Learn it. Invest a little bit of money. And then see how the entire process works. Experience it yourself. And once you get a proper hang of it, once you master it, and then you can do some serious investing. So I think it's a process. So whether you're young or old, I think everybody goes through the same process of this experience of learning.
So is it a huge learning curve?
Not really. It all depends how fast you adapt. We have some younger set of investors who are extremely savvy and very snappy at catching up. They are better at evaluating research. They are faster at taking in information as well and analyzing it. I think they are more clued on for charting and various software that you may use to chart trends in the market and understand it better. So you get some very, very smart investors in the rush who are coming into the market now, who are pushing us as well to keep improving our data, the way we present the data and all that. So demands are higher. So you can see a higher level of sophistication among investors. So it's a learning curve. It can be relatively short depending on how fast you catch on.
So you mentioned development of the stock exchange itself. How's that going? Do you see any specific increases in the aspects of trading?
Yes, so when you talk of development, you're talking about few things. One is we are continually developing the infrastructure to give you better systems, better accessibility. And one example of that is the digitization that I spoke about, enabling access to the market. We have enabled greater access. So now anybody from any part of the, even from any part of the world, can now use a mobile phone and get into a market and invest in a market. So it becomes relatively, so it's about accessibility, enabling, and that's about digitization. Digitization is about technology. How do we keep improving technology? So one part of it is about the market infrastructure that we create, keep the technology up to date and give cutting edge technology to enable this level of access. So there is uptime, 100% uptime, you don't ever go down. And the security that you provide, that you don't allow hacking and ensure that the information is kept securely. Then the other part of it is about expanding the volumes. You have more investors, you have more companies listing, you're giving greater choice to investors. So that's the volume increase that you spoke about. So we are pushing for more companies, pushing for more investors, pushing for more foreign investors. So that's the volume part of it. Then you have the product expansion. So right now, what do you have as a product? We have just two products, corporate debt and shares. But then you need to give a wider choice to investors to invest their money in. So you have more, a wider range of asset classes. So we are working on a product, a gold product, a paper-linked gold product that can be denominated in US dollars. We are also working on a mortgage-backed securities product with the banks, which again is a real estate linked product. Then we also have introduced what we call a real estate investment trust. Again, it's about investing in units of a real estate project, enabling investors to invest in real estate assets that, well, we think it will be a popular product. And then the secondary trading of corporate debt, like a over-the-counter market in corporate debt. So there are at least 4 or 5 new products that we have lined up, which will offer a wider choice to investors. I don't think we'll have time to go into each of those products in detail, but broadly, so we have about 4 or 5 products that we are working on. And also we are thinking of enabling companies to raise capital, not only in rupees, but in US dollar terms as well. We need foreign currency. So we are now enabling, we have done the regulatory structure to enable companies to also raise US dollars in terms of capital from foreign investors as well.
So sir, you mentioned US dollars and investments from foreign countries. How are you enabling that?
Well, let me put it this way. Since 1990, Sri Lankan capital market or the stock market has been the recipient of foreign investments. We've been lucky that way. And I think for a very long time, for the last 30 odd years, we have had a very well established system where foreigners can bring in their money and then take it out again, plus any gains that they have made and any dividends that can be paid, that may have been paid to them. So we have had a very good established system, and we have had foreigners investing in our market. And if you look at in terms of percentages, roughly about 30% of our turnover has been generated by foreign. So foreigners are nothing new to the Sri Lankan market. They have been used to it, and there have been some long-term foreign investors who have been in our market. Currently, about 25% of all the shares are owned by foreigners. So fairly large segment is owned by foreign. Many people may not know that. Now, what we are trying to enable through this new initiative is all the shares that foreigners buy, they buy in rupee currency. So they bring in their dollars, they convert it to rupees, invest in rupees, and when they want to take it back, they reconvert into US dollars and take it back. So in that process, there is a possibility of them losing out on the conversion, etc. So there are what we call the currency risk that a foreign investor would take. On the other hand, you have Sri Lankan companies who require foreign capital or US dollar capital, because there are companies who have exports, who are involved in exports, who have dollar exposures. So they need to raise capital in US dollars. They also want to expand overseas. If you take a garment industry, they have set up factories in Bangladesh and Vietnam and so many places. Though they need capital to expand. So thinking of all that, we have now enabled and done the entire framework and the regulatory framework and the technology to enable Sri Lankan companies to come into the stock market and not only raise rupee capital, all this it be rupee capital, but to raise capital in US dollars, so that they can use those dollars from foreigners and then take it overseas for their expansion work. And I think a lot of companies will like that, and foreigners will like that, because they can invest in dollars and not convert dollars to rupees, keep it in dollars and take it back whenever they want to. So it's a win-win for both foreign. It's good for the country because there's an inflow of dollar, and it's good for the local company because they have the opportunity of raising the much needed dollars for their expansion overseas.
Okay, so will they be using brokers in our country, or will they be free to use any broker?
Well, where a listed company is concerned, they don't really use brokers, but they use investment banks. And we have, I think, a fairly good developed set of investment banks who are very smart, who are operating in the local market. And I'm sure those companies can well use one of those investment banks who will act as the advisor to the issue, and then they'll structure an IPO that we spoke about earlier and then market the IPO among foreign investors. They do overseas roadshows and sell the company basically to the investors through an IPO.
So you mentioned overseas roadshows. I'm not entirely clear what that is.
Okay, let me elaborate. Now, I did mention that as much as 30% of volumes was generated by foreign until very recently. Now retailers are dominating our market simply because interest rates are low and there's a rush to it. But traditionally, foreigners have been the mainstay, an important segment. So in order to promote the stock market to foreign investors, stockbrokers and the stock exchange regularly go overseas and then market the stock market to potential foreign investors. So when we go overseas and we make a pitch to foreign investors, we call it a roadshow, because again, it's a entire series of events that take place. And if I typically describe one, for example, we go to London, because London is a hotbed for investments into Sri Lanka. So we take along with us about 10 or 12 potential listed companies. We take representatives from the government, the finance minister, the governor, etc. We take the Securities and Exchange Commission. The stock exchange has a delegation. There are stockbrokers. So there are listed companies. So we go as an entire industry and we showcase the market through various presentations, discussions, meetings. So it's like a 2-3 day event, and we invite institutional foreign fund managers who will be interested in investing in the market. So it's a big event that happens, and then we somehow try to convince those investors to come in, and we have these roadshows regularly in most of the foreign capitals, in New York, in London, Singapore, some European cities. In fact, in 2 weeks' time, we are having a investor forum in Dubai, targeted at the Sri Lankan diaspora, encouraging the Sri Lankan diaspora to invest in our company. So as an industry again, we are going there to conduct this event to encourage investors to invest in the market.
Now we've covered quite a variety of points. We talked about the stock market, your duties, the Colombo Stock Exchange duties, and then we also had a financial conversation about how investing is better for the right people, considered with reference to financial fixed deposits and savings accounts. And then we also talked about risk a little bit, and then we got into foreign investments and all that. Now, to our target demographic, what would a young investor do if what would be the first source of knowledge that he can get? What source have you provided as the Colombo Stock Exchange for them to gain knowledge about exchanging?
Okay, so we have an entire learning module, and we are using social media quite extensively to do that, because you find that that's probably one of the most effective ways. Traditionally, we had the leaflets and the books and all of that where people used to come and get, but now it's all electronic. So we run a YouTube channel on our own, and we produce various introductory videos explaining about how one could invest in the market, what are the benefits of investing in the market, how one can select a stockbroker, to what are the companies that are involved, and talking about the process and all that. So we have constantly updated videos that we use on social media. We use YouTube, we use Twitter to send out various market updates and messages. We use Facebook to publicize our workshops. We conduct a large number of webinars. Earlier seminars, physical seminars, now converted to webinars, and we run it in all languages, all 3 languages, across a range of different topics. So one can visit our website or any of our social media channels and find out what's going on, what are the learning tools that are available, and join one of those webinars. You can ask questions, you can participate. We have qualified lecturers with exposure and background in finance who conduct these lectures and these webinars, and those are carried out right throughout the year on all the connected topics relating to stock market. So there is a wealth of information out there for any new investor to learn about the stock market before getting into it. So there is no question of burning your fingers or whatever, because you can have a very good knowledge before you come in. The second aspect is that investing in the stock market means it's all about information. It's about information about the company that you invest. You can learn about the company. All of that information is made available through the mobile app and the website. So if you want to know about a particular company, who the owners are, who the promoter of the company are, the management, what industry it is in, and the financials, and plus all of the regular disclosures that the company makes, all of that is made available. So you have a whole heap of information that comes to you by virtue of you investing in a listed company. Even if there's any adverse information relating to the company which can impact on the price, in turn which can impact on your decision to either buy or sell, that information is immediately disseminated to the market through the stock exchange. And we have a set of very strict rules to ensure that companies necessarily disclose any information that is material to the share price of a company. That's a very stringent rule, and they do that. Even if a director buys shares of the company that he's on, even that should be disclosed, and we ensure that this. So as an investor, you have a whole heap of information coming to you, enabling you to make a very well-informed decision.
Okay, so now let's draw back to that example you mentioned earlier. You said, let's consider that novel investor. Now he's armed with knowledge, he has rules to protect him, and he invests. What are the benefits that he may gain?
Yeah, in a stock market, you basically have 2 primary benefits. One is called capital gains. The second is called dividends. Now, capital gains means the increase in the share price. So, for example, you select a particular company and you invest your money in that company, and the price of that share in the market is say 10 rupees. So, you buy the share at 10 rupees. And for number of factors and reasons, let's say the share price increases to 12 rupees, then you have made a 2 rupee capital gain or a 20% return. That's what we mean by a capital gain, the appreciation of share prices. So that's one way, and a very popular way, of how people make gains and returns in the stock market, by the increase in share prices. Then the other way is about dividends. Dividends is where companies, when they make profits, they share the profits with shareholders. So they will determine, depending on how profitable they have been for the year, a certain percentage of profits to be paid back to a particular proportion to all the shareholders, and that is paid by way of a dividend, a cash dividend, which is again can be paid once or twice a year, and which can be quite substantial depending on the number of shares that you own. So that's the second form of return. So you can either get dividends or capital gains as benefits in the stock market. But I must also say at this point, again going back to this concept of risk, so it's not always that share prices will appreciate. There are instances where share prices will also decrease. So like you make a capital gain, you can also make a capital loss, and that's where this element of risk is there in the stock market, and you need to be mindful of when to invest, what stocks to pick, etc. correctly, so that you will not make a capital loss.
So the investor would either gain capital loss by selling his shares, right?
Yeah, so no, there are various ways that you can mitigate risk and reduce an opportunity of any possibility of a capital loss. Everybody would want a gain, everybody would want a capital gain, and right now if you take the stock market today, year to date, there's a 40% gain in the main all share index. So it's a 40% return on the index if you had invested in January, fairly significant. But as I said, there are risks of certain share prices declining due to a number of factors, and there you need to be very mindful, so to buy at the correct time and sell at the correct time as well, because share prices can be affected by a variety of factors, internal and external. Internal factors would mean factors concerning the company, how profitable it is, the growth potential of the company, etc. External factors can be interest rates, political environment, global trends, pandemics, all of that. So both these factors have a bearing on how it will affect the share price to either increase or decrease.
Okay, sir. So now, if I got this right, the novel investor would either gain capital gain through reselling his shares in the secondary market, or he would be able to keep those shares on his accounts and gain dividends. So,
Yes.
would you like into it?
No.
Okay. So, what out of these two is better? Keeping your shares for a long term and then gaining dividends, or rehashing and day trading, as it's called, selling your stocks as soon as the price rises?
Well, it depends on the risk profile of the person. As an investment, we will promote the stock market always as a long-term investment. It is not a lottery where you can buy today and gain tomorrow. There are short-term gains to be made, no doubt about it, but there's a risk in that if you are going in for short-term gains. Stock market is essentially a place where you invest your money for the long term, and you need to have a long-term horizon. So if you are trying to make a fast buck, a quick buck, and very short-term gains, you may lose, you may win, but there is an element of risk because there are short-term fluctuations in the markets. So we wouldn't recommend you to make short-term gains. But having said that, there are plenty of people who do that. So it depends on the investor profile as to whether you're looking for short-term gains or long-term gains. But essentially, a stock market is something that you need to take a long-term view, because these companies, when you invest the money, they need to make money, they need to grow their business, they need to become profitable, and then with the company growing, the share price also will grow and give you better returns. So I think essentially you should look at a stock market as a long-term investment, where on one hand you can see the share price growing, creating wealth, because your wealth increases with the share price and your investment increasing. At the same time, having the shares, you will get a regular dividend. You will get either annual or sometimes twice a year, a dividend, which will give you a form of a return as well.
So in the long run, the general market tends to increase in value, right?
Generally, if you compare the different asset classes over the long period, stock markets generally give higher returns than any other form of investment. It outperforms all other forms of investments over the long term.
Okay, sir, now I believe we have given many forms of knowledge as well as many sources for novel investors to consider investing. Is there any final message or thought that you would like to leave our young investors with?
Yeah, I think stock market is a place where you can create wealth, and a place where a productive investment can be made. So I think it's very important that, particularly for young people, you look at the stock market as a long-term investment and get in young and then start investing, because you will find that over a period of time, when you mature and when you need the money, when you want to buy your first car, when you want to get married, when you want to buy your first house, when you want to pay for your children's education, and finally when you want to retire, if you have invested wisely in fundamentally strong companies, you will find that your investment that you have made years ago would have grown considerably, and then will give you the money when you need it. So I think stock market is certainly a place where you should seriously consider investing for your money to grow.
Okay, coming here as a completely novel person, I now personally and us as a crew have gained many forms of knowledge as well as even sources to start investing. And as you said, sir, the general returns that we gain through the stock market. Thank you, sir, for helping us make TV Royal 21 a force for good. And that's it, ladies and gentlemen. We hope to catch you on the next episode of TV Royal 21, and we hope to bring you more content just like this. It's been an honor to share this time with you, sir, and we'll see you on the next episode.